Three massive crypto ETF applications just appeared on the DTCC securities list overnight. We're talking XRP, Solana, and HBAR. And this could trigger the biggest institutional money flood crypto has ever seen. While everyone's sleeping on this news, smart money is already positioning for what could be a $100 billion market cap explosion across these three assets. But there's a catch. The SEC has exactly 29 days to make their final decision on XRP's ETF, and the clock is ticking louder than a time bomb. Stick around, because what I'm about to show you could change everything you think you know about the next altcoin season. Alright, let's break down what just happened because most people are completely missing the significance of this move. Three major ETF applications just hit the DTCC's National Securities Clearing Corporation list. And this isn't some random administrative paperwork. We've got Fidelity's Solana ETF with ticker FSOL, Canary Capital's XRP ETF trading as XRPC, and Canary's HBAR ETF under HBR. Now before you think this is just another filing in the endless crypto bureaucracy circus, understand this? Getting on the DTCC list is like getting backstage passes to the institutional money concert. Eric Balchunas, the ETF analyst who basically predicted the Bitcoin ETF approval timeline perfectly, dropped this nugget: almost zero tickers that make it onto this list never launch. Think about that for a second. We're not talking about maybe or possibly here. This is the operational pipeline where dreams become tradable securities. Fidelity isn't some random crypto startup throwing darts at altcoins. They're managing one of the most actively traded Bitcoin ETFs in America right now. Their move into Solana signals something massive: institutional confidence in blockchain scalability beyond just Bitcoin and Ethereum. Despite all those network outages that had crypto Twitter losing their minds, Fidelity sees something the retail market is still figuring out. But the real plot twist? Canary Capital, the scrappy underdog that filed the first XRP and HBAR ETF applications months ago, just got both their tickers approved for DTCC listing. This isn't David versus Goliath anymore. This is David getting invited to Goliath's exclusive club. Now, before you start celebrating and updating your portfolio targets, we need to talk about the elephant in the room: the SEC's decision timeline. And folks, this timeline is tighter than a Tesla coil about to explode. Canary's XRP ETF decision deadline, October 19th, that's exactly 29 days from today. 29 days for the SEC to either greenlight institutional XRP adoption or crush the dreams of every XRP holder who's been waiting since 2017 for their moonshot moment. Fidelity's Solana ETF has until November 14th, and Canary's HBAR decision drops November 12th. This tells us two critical things. First, DTCC listing doesn't guarantee SEC approval speed, and second, the Commission is clearly building towards some kind of coordinated decision framework. Think about the optics here. If the SEC approves XRP's ETF first, they're essentially admitting their 3-year legal battle against Ripple was pointless regulatory theater. If they deny it while approving Solana and HBAR, they're showing clear favoritism that could trigger congressional hearings. The pressure is mounting from every direction. Institutional players are lined up like Black Friday shoppers. Retail investors are watching every regulatory tweet, and the SEC knows that whatever they decide in the next few weeks will set the precedent for the entire altcoin ETF landscape. While everyone's focused on ETF drama, HBAR price action is setting up what could be the most predictable, profitable trade of the quarter. And I'm about to show you exactly why professional traders are quietly accumulating while retail investors are still debating whether HBAR is even a real blockchain. HBAR has been trading in a tight range between 21 cents and 27 cents for weeks. This isn't random sideways action. This is textbook consolidation before a major directional move. Two respected crypto analysts, WorldofChart and Butterfly, have identified the exact same setup from different technical perspectives, and their price targets will blow your mind. WorldofChart spotted a descending wedge pattern that's compressed HBAR price into a coiling spring. Their analysis shows a measured move target of roughly 28 to 30% once the price breaks above the current resistance. But here's the crucial detail everyone's missing: volume confirmation. Breakouts without volume are like promises from politicians. They sound good but rarely deliver. WorldofChart emphasizes that any legitimate breakout needs participation, meaning institutional and whale money stepping in to validate the move. The chart shows clear volume spikes at previous breakout attempts, setting the stage for the next major move. Butterfly takes a different approach but arrives at an even more aggressive conclusion. They've identified a bullish flag pattern on the 2-day time frame. And folks, bullish flags are continuation patterns that professional traders dream about finding. The mechanics are simple but powerful. After HBAR's strong rally, the price has pulled back into a tight descending channel, creating the flag portion of the pattern. The flagpole height, when projected from the breakout point, gives us a measured target around 54 cents. That's not a typo. We're talking about a potential 100% move from current levels. But the real confirmation comes from the technical indicators, and they're painting a picture that would make any momentum trader salivate. Time to get into the nitty-gritty data that separates successful traders from hopeful gamblers. I pulled the latest technical readings, and every single momentum indicator is aligning like planets during a solar eclipse. RSI sits at 66.27. This is the sweet spot where bullish momentum is confirmed without hitting overbought extremes. We've got room to run higher without triggering automatic selling from momentum algorithms. Stochastic at 79.25 confirms strong upside momentum is building. This isn't a dead cat bounce or random price noise. This is sustained buying pressure that's been accumulating for weeks. MACD shows slight positive momentum at 0.002. While this seems small, it's the early stage signal that bigger moves are coming. MACD crossovers often precede the major price explosions that create overnight millionaires. But the indicator that really caught my attention? ADX at 53.87. ADX measures trend strength, and anything above 50 indicates serious directional conviction. This means when HBAR breaks out of its current range, the move has structural support to continue rather than fading after a few days. CCI at 122.52 points to elevated buying pressure that's been building beneath the surface. Bull-bear power slightly positive confirms buyers have the edge, even if it's not overwhelming yet. These aren't random numbers. They're the mathematical fingerprints of institutional accumulation and smart money positioning before retail investors realize what's happening. Now, we're reaching the climax of this entire setup, and it's absolutely beautiful from a risk-reward perspective. We've got 3 massive catalysts converging in the next 60 days that could create the perfect storm for exponential price appreciation. First catalyst, ETF approval momentum. Even if HBAR's ETF gets delayed, XRP or Solana approval creates precedent and FOMO buying across all major altcoins. Institutional money doesn't buy one crypto ETF, they diversify across the entire approved landscape. The second catalyst here is technical breakout confirmation. HBAR's price is coiled tighter than a compressed spring, right at the exact moment when ETF news could provide the fundamental catalyst for a breakout. This timing isn't coincidental. Smart money positions before news, not after. Now the third catalyst is market cycle positioning. We're potentially entering the final phase of this crypto cycle, where altcoins typically outperform Bitcoin by massive margins. HBAR's current market cap gives it room for 5 to 10 times moves that would barely even register on Bitcoin's radar. The convergence setup is actually this simple. ETF approval news triggers a breakout above 27 cents volume confirmation, validates the move, and momentum algorithms kick in to push price toward the 54-cent flag target, or WorldofChart's 30% measured move. But here's what must happen for this entire thesis to work, and why timing your entry is absolutely critical. 3 requirements will determine whether you're counting profits or losses in the coming weeks. Requirement number 1. A clean breakout above 27 cents resistance that immediately holds as new support. If HBAR breaks above 27 cents but immediately falls back below, that's a failed breakout that could trigger stop-loss selling and delay the entire setup by months. Requirement number 2, volume confirmation behind the breakout. We really need to see at least twice the average daily volume on the breakout candle to confirm institutional participation. Breakouts on light volume are traps that catch retail investors buying fake momentum. Requirement number 3, technical indicators must maintain alignment. RSI needs to stay above 50, MACD must remain positive, and ADX should hold above 45 to confirm trend strength isn't fading. Meet all 3 requirements, and we're looking at the highest probability altcoin trade setup of the quarter. But fail any single requirement, and the entire thesis crumbles faster than a house of cards in a hurricane. The DTCC listings aren't just administrative paperwork. They're the starting gun for a race between institutional buyers who understand that crypto ETF approval is inevitable. HBAR's technical setup gives us a measurable way to profit from this macro trend, whether ETF approval happens in October, November, or even gets delayed into 2025. The consolidation pattern and momentum indicators suggest price appreciation is coming, regardless of regulatory timing. But remember, crypto markets don't move in straight lines, and even the best technical setups can fail if broader market conditions change. Position sizing and risk management separate successful traders from cautionary tales. The next 60 days could determine which altcoins join Bitcoin and Ethereum in the institutional portfolio allocation conversation. HBAR, XRP, and Solana just moved to the front of that line. This content is for educational and entertainment purposes only and should not be considered financial advice. Cryptocurrency investments carry substantial risk, including the potential loss of your entire investment. The crypto market is highly volatile and unpredictable. Past performance does not guarantee future results. Always conduct your own research and consider consulting with qualified financial professionals before making investment decisions. Never invest more than you can afford to lose completely.